Welcome back to The Explainer. Today, we are going to unlock the details on a really important tool in the home buying world, the FHA loan. Let's jump right in. You know that feeling? You're scrolling through home listings, dreaming about your own place, and then you just hit a brick wall. That 20% down payment, the super high credit score, it feels impossible. Well, if that's you, you are definitely not alone. For so many people, these hurdles, the huge pile of cash for a down payment and a perfect credit history, they just feel insurmountable. But it's exactly because these barriers are so common that some special programs were created to, build a bridge over them. Okay, so let's get into the solution here. The Federal Housing Administration Loan Program, now, it isn't a lender itself. A better way to think of it is as a kind of government-backed helper, one that's designed to guide more people toward owning a home. So what is it exactly? Well, an FHA loan is a mortgage that's insured by the Federal Housing Administration. And that's the key word right there, insured. See, the FHA doesn't actually give you the money. A normal bank or lender does that. The FHA just provides insurance on that loan, which makes the lender feel a whole lot safer. And listen, this isn't some new, trendy program that just popped up. Nope. The FHA has been around since 1934. It was created by Congress way back then to help stabilize the housing market. It's a really foundational piece of the American housing landscape. All right, so now we know what it is. Let's break down the numbers and really look at the rules of the road. This is where we get into the nitty-gritty of how an FHA loan actually works when you're the one trying to get a house. This really gets to the heart of why so many people look into FHA loans. The barrier to entry is just lower. A conventional loan often demands a really high credit score and a big down payment. FHA guidelines, they're much more flexible, and that opens the door for buyers who might have a shorter credit history or maybe a few dings in their past. So how can the FHA be so flexible? What's the secret? The answer is something called mortgage insurance premium, or MIP for short. This is the absolute core of the deal. The borrower pays this insurance premium, and that in turn protects the lender if the borrower can't make their payments. It's the trade-off, you see, for getting that lower down payment and more lenient credit requirements. So what does that insurance actually cost? Well, for most new FHA loans, the annual MIP is about 0.55% of the total loan amount, and that gets divided by 12 and just added right on top of your monthly mortgage payment. And this right here, this is a big one. You need to pay attention to this. With a conventional loan, you might have mortgage insurance, but you can usually cancel it once you've built up enough equity. With FHA loans, that MIP is often stuck with you for the life of the loan. You pay it every single month until you either sell the house, refinance to a different loan, or pay the mortgage off completely. It's a huge deal. FHA loans also have some pretty strict rules about the property itself. First off, it absolutely has to be your main home, your primary residence, and you have to move in within 60 days. They also have rules against flipping it too quickly, but, and this is a pretty cool twist, you can actually buy a property with up to 4 units, as long as you live in one of them and rent out the others. Pretty interesting, right? Okay, we have covered a lot of ground. The good and, the not so good. So let's try to put it all together and weigh the advantages against the drawbacks so you can see the whole picture. And this table just lays it out perfectly. It really shows that central trade-off. Over in the good column, you've got accessibility, lower credit scores, lower down payments. But then you look over at the catch column and you see the cost of that accessibility. There's that mortgage insurance premium that often sticks around forever, and those strict rules that mean this can't be an investment property, at least not right away. So after looking at all these different angles, we land on the most important question of all. How do you decide if this is the right path for your own home buying journey? When it's all said and done, it really boils down to this one clear trade-off. An FHA loan can get you into a home sooner and with less cash saved up front, but the price you pay for that early entry is a higher monthly payment and a long-term insurance cost that you might not have with other types of loans. Look, an FHA loan isn't for everybody, but for the right person, it can be an incredibly powerful tool. I mean, it can be the thing that makes the difference between renting for years and finally owning your own home. So the only real question left to answer is, for you and for your situation, could this be the key?